All right, let's dive into a story that's not just about business, but about power, legacy, and the fall of a titan. We're talking about a corporate takeover that absolutely rocked India's cement industry. It's a classic tale, really. A regional king losing its crown, a savvy billionaire investor playing a high-stakes game of chess, and a national giant swooping in for the final decisive move. And this quote, wow, it just captures the whole drama perfectly, doesn't it? A classic saga of a regional titan's decline. I mean, this isn't just about numbers on a spreadsheet or some boring corporate filing. We are literally witnessing the end of an era for a company that, for the longest time, seemed completely untouchable. Okay, so let's rewind a bit. For decades, if you were in South India and you thought about cement, you thought about one company, India Cements, led by the incredibly powerful N. Srinivasan. This company wasn't just another market leader, it was a true institution. So the big question is, how on earth did they hold on to that power for so long? Well, they had what investors love to talk about, a moat. Like a castle. It's basically the set of powerful competitive advantages that keeps rivals out. And theirs was huge. We're talking undisputed market share, a brand that people's grandparents trusted, the best access to limestone, the key ingredient for cement, and of course, some serious industry and political clout. For a very long time, that moat looked like it could never be breached. But you know how these stories go. Nothing lasts forever. Between 2020 and 2024, that deep, wide moat, well, it started to evaporate. The fortress that was India Cements began to show some serious cracks, and the entire market was changing at a speed the company just couldn't keep up with. So what exactly happened? Well, they got caught in what you could call a pincer movement. On one side, their own factories and infrastructure were getting old, slow, and expensive to run. And on the other side, you had these new, lean, aggressive competitors jumping into the market with super modern, efficient strategies. Just look at this contrast. The rest of the industry was innovating, right? They were installing things like waste heat recovery systems, moving to green energy to slash costs. And where was India Cements? They were stuck with older, inefficient tech, sky-high power and fuel bills, and a balance sheet that was just bloated with debt. It's a textbook chase of a company getting left in the dust by progress. And you know what's really fascinating? You could actually watch this crisis unfold just by listening to what the management was saying over the years. In 2021, it was all cautious optimism. By 2022, they were on the defensive, blaming high fuel costs. A year later, they were actually admitting their own plants were a handicap. And by 2024, the tone was somber. It was all about just survival. The writing was absolutely on the wall. So, just as the company's performance is hitting absolute rock bottom, a brand new, very powerful player enters the board. And this, my friends, is where the whole game changes. The stage was set for the final act. And that player was none other than billionaire investor Radhakishan Damani. Now, he starts quietly, or not so quietly, buying up massive chunks of India Cements stock. His involvement was so huge that it created this really weird situation. The company was bleeding money, but its stock price didn't totally collapse. Why? Because Damani's presence basically put a floor under the price. Everybody in the market knew a takeover was now a real possibility. And he didn't stop. He eventually built up a whopping 23% stake in the company. Now, to put that in perspective, a holding that large is massive. It effectively made him a kingmaker. He was holding the keys to the entire company's future. Meanwhile, you still have the original founders, the promoter group, led by N. Srinivasan. They held their own controlling block of just under 33%. So you've got this incredible power dynamic brewing, with two massive stakeholders essentially deciding the fate of this once great company. And then the giant enters the room. In mid-2024, UltraTech Cement, the biggest producer in the whole country, pulled off an absolute masterstroke. It was a brilliant two-step move. First, they went straight to Damani and bought his entire 23% stake. Boom! A huge piece of the company is now off the board. Then they went to the promoters and struck a deal for their controlling stake. Just like that, the acquisition was sealed, and any other potential rivals like the Adani Group were completely shut out. Game over. Okay, so with the takeover done, the story of India Cements totally changes. It's no longer about a fall from grace. Now it's about a potential rescue mission. But for anyone looking at this as an investment, the billion-dollar question is, can UltraTech really turn this old, creaky titan around? And this, of course, has kicked off a classic bull versus bear debate. The entire bull case, the whole argument for optimism, really boils down to this one simple chart. Look at this. Before the takeover, India Cements was making pretty much zero profit for every single ton of cement it sold. Zero. UltraTech's whole plan is to come in and boost that number up to the industry standard, which is somewhere between 800 and 1,000 rupees per ton. Now, if they can actually pull that off, that is a massive, massive win. So you've got two camps. The optimists, the bulls, they believe UltraTech has the magic touch. They think their expertise can fix those old plants, cut costs, and unlock the true value of the company's assets, like all that limestone. But the skeptics, the bears, they're shaking their heads. They're warning that fixing this mess is going to take years and cost billions, all in a market that already has too much cement. They basically think the takeover excitement has already been priced in and the easy money's gone. When you step back, what you realize is that this takeover has completely changed the identity of India Cements. It's not an independent titan anymore. It's now just an asset in the portfolio of a much, much larger company. So let's break down what that really means if you're looking at it from an investment angle.
See, for years, India Cements was a perfect example of what's called a value trap. It's one of those stocks that looks really cheap on paper. You think, wow, what a bargain. But it's cheap for a very good reason. The actual business underneath was struggling badly. Really, the only thing keeping the stock price from completely tanking was the endless rumor that someone someday would buy them out.
But now, it has transformed into what we call an M&A value unlock play. The hope isn't in the old company anymore. The bet is entirely on the new owner, on UltraTech's ability to come in, create synergies, restructure things, and unlock hidden value. The company's future value is now completely tied to how well UltraTech can integrate and fix this broken asset. So here's the bottom line. If you're looking at India Cements today, you're not really betting on the South Indian cement market anymore. That's the old story. You are making a direct, straight-up bet on UltraTech's management and their ability to pull off one of the biggest, most challenging turnaround projects this industry has ever seen. And all of this leaves us with one last big question to chew on. The story of India Cements is incredibly dramatic, for sure. But is it a one-off? Or is this just the inevitable fate for all the old regional champions out there in an era where massive consolidation is king and only the biggest, most efficient giants seem to be able to survive? Definitely something to think about.